guest today, don't you?
Yes, we do. Um, People listen to her, they will be successful. This is Alicia Kishpa,
Hey
and
guys.
what she helps me out with my personal life insurance, but it's not really that. So I did it injustice by just calling it that. But what I will do is I will let her explain, introduce herself, and we'll go from there.
All right, fantastic.
Hi guys.
Hi.
Um, it's been great. I've been able to help Tom and a lot of different clients across the country because a lot of people are looking for alternatives or wait, maybe this isn't the only thing that we can use to save. Maybe just a 401k isn't just the only way we can save for retirement. We're able to use a strategy that was created by our founder that allows people to retire earlier by using their money and growing it in two accounts at the same time. And so that allows people to have a bigger lump sum for when they retire and also just monthly payments that go into their paycheck.
Very good. So, kind of break down how people like Tom do this.
It's quite easy. What we do is we first set up the first account and we fund the money into that one. And then once the money's in that account, we're able to borrow against that account to go into our second account. And that way we're able to do it in both places at once. The nice thing about this is the loan is not on your credit score, but it's against the credit of the first account. And so it doesn't have impact on your ability to loan or anything like that. And the payout we paid back to that loan from the first account.
Interesting. Tom, thoughts to kind of explain a little bit more how she's helped you.
I'll take myself. I have a 401k. I have, all the goodies, Roth IRA, all the buzzwords, that you hear. And what she was able to do is she showed me. I might add, it took me a year to fully grasp what I was thinking of doing, but that's because of my AD&D, or whatever you want to call it, kind of like A1. But and what happened was I finally said, okay, great, um, let's do it. I'm throwing in 100,000 a year, so I throw in $300,000 over the course of 3 years in it. After that, I wait 10 years, I have roughly $1 million in my account.
Tom, are you there? I can't hear you.
Yeah, you went silent for me too.
Tom, we lost you. You muted. You're muted, Tom. Tom, we can't hear you at all. Somehow what happened was you started talking. So Alicia, go back and explain more about what he was doing until he gets back his voice again. Because I was like wondering what was happening. I do something and I was looking and I'm like, no, it's on the internet. So let's go back through. So basically, what makes you different? Explain that more because that's what I'm really trying to break down.
Yeah, what makes us different is most people put their money over into a life insurance or they put their money over into an investment and they divide their money. And those two people are competing for their money and competing for their funds. What the founder of my company has been able to do is take those two, put them in a sandbox, and build you a nice castle for retirement. And by able to use this method, we're able to put money into that life insurance, borrow against it, and go into your investment. And then later on, what will happen is instead of paying premiums for the next I don't know, 10, 20 years or 15 years, like most life insurance companies are set up, we're able to help the client to make those premium payments year three on. And so if they don't want to or don't need to make the premium payment those years, we go ahead and take care of that using the system. So it allows the client to say, hey, right now, today, I have a lump sum. I have $300,000. And I don't know how much money I'm going to have in year two, three, four, five, six, seven, eight, nine, 10. We don't know what's going to happen. We can take that lump sum, go ahead and set up this process, get the wheel spinning, and just let it spin. And you don't need to add anything extra to it unless you want to. It's no longer an obligation, but an opportunity if you want to. And that allows the clients to be able to plan for the future easier. And the money that comes back out is going to be a tax-free income. So they don't have to worry about Congress that hasn't been elected telling them how much of their money they get to keep or not keep. And that it's really flexible on how the payout happens at the end. So you can say, hey, Alicia, I want to set this up and take money in 5 years. And then you get down the road and you say, actually, I need the money in 10 years, or I need it in 7. And you can change, and a lot of flexibility there. You take money this year and not the next year. And so it gives clients a lot of flexibility on how they want to spend their money and when they do. And the IRS isn't telling them, oh, you have to take this much out, or you have to do it in this way, or it has to be inherited this way. It gives them a lot more flexibility.
And what kind of investments is the money going into towards? Yeah.
So for that part, we meet with a wealth manager and they can choose what type of investments that they want to do on that side. So there's a lot of different options. It's really just very conservative investments, things that are just going to hold their value. We're not looking to time stocks or anything like that, just conservative investments that they can do on that side.
And you talked about life insurance, but there's still the coverage of life insurance involved in this, right?
Yeah, so we still have a death benefit, we still have a cash value that's growing, but we design our policies a lot different than, our grandpa's policy that was just paying out a death benefit, and that's what we used it for. These type of policies are specifically designed for income growth, designed for that cash value growth, so that clients can later on be able to use them to pay income to themselves, along with using the investment account to pay them income. So two sources of income for them.
I got it. And basically, who do you usually work with?
As far as carriers,
Yeah. No, no, not carriers, but you mean like the kind of clients you're looking for.
oh, clients. We work with a really wide range of clients. Our minimum is going to be $100,000 lump sum. And so we spread that out over 2 years going into the life insurance. And that's going to be our minimum. So if someone has, $100,000 that they want to use, that's really our minimum. And then we work with clients all the way up to, I have a billionaire with 18 policies. And so it's a very wide range of people that it can work for. And then as far as qualifying for the policy, we do have a lot of carriers that are accepting a lot of different health issues that used to not be okay. And so we're able to get a lot of people coverage.
And so you work with Tom and his clients.
Yes. Mhm.
Okay, so you help the individual business owner as well that works with ClaimLinks as part of another offer. If you go to ClaimLinks, they connect you to you and the
Yeah,
company.
you go to Tom directly. I'm not integrated into the ClaimLink system yet. So you just go to Tom directly and then he puts you on my calendar.
I got you. So, Tom, I think we're going to I'll be editing things out because somehow the microphone's gone. So I'll just keep talking to Alicia about this. So let's talk about the investment side of things and kind of breaking it down. What's the difference from just, okay, I'm just going to go purchase cash value life insurance on my own?
Yeah, so when you purchase cash value life insurance on your own, depending on who sells it to you, it could be, structured for commission. It could be structured just to pay a target premium, which means the cash value wouldn't grow as well. And it could be on
Hello?
a death benefit. Oh, Tom's back.
Tom,
And
you're back. What happened? What happened?
I'm so confused. I don't know. Me and IT is don't mix. It's like oil and water.
Okay, so we're going to be having some fun edits to that. Thank you again, Tom, for your technology. But we basically had the conversation. I was trying to differentiate Alicia compared to
Oh,
other
I
people.
heard you.
Yeah, yeah, yeah.
Yeah.
I know you
No,
heard
I
me.
just couldn't speak.
You couldn't
It's like,
speak. Yes.
Tommy, can't hear you.
Yeah,
But
exactly.
but more importantly, I saw the email that Alicia sent earlier. So you drove your family from what, Arizona all the way down to, where did you go? Argentina?
yes.
That had to be insane driving through
How?
all those countries.
Yeah, it was insane and it was so much fun.
So
Does each
drove. So,
country
so
have like security you got to go through?
Yeah, you have to change out your visas, you have to change out your phone chip, you had to change out your money, you had to pass your border control and hope the person liked you. It was a lot of fun. But luckily I was traveling with 4 kids, so I had a blonde-haired, blue-eyed little girl who spoke fluent Spanish and she was about 10. And so I would hand the person 6 passports, they'd like glare at me and then she'd pop up and say, "Yo soy fe." And then she'd start speaking in Spanish and the border control person would end up taking pictures with us and it was a fun time. So it was great. It was awesome to experience so many cultures and so many different people.
so you can
And you,
drive. That's where I'm confused. Just like confused about, the different what I've learned in this. So you were able to drive that entire way.
Almost. So there's one caveat. Technically, you can drive from Panama to Colombia, but you kind of need like a baggie with like white powder in it to get through parts of that, and I wasn't dealing drugs. Technically there is a road there, but we didn't go there. So on Panama, we got onto an airplane, and our car got onto a barge and met us over there in Cartagena, Colombia. So that part we didn't drive. But
Okay.
yes, they are connected. It's called the Pan American Highway. And we actually drove from America to up to through Canada to Alaska already. So we've done that part already.
So what kind of vehicle did you drive in?
So most people make this trip in like a Sprinter van that's all like decked out and everything. We did like a 10-year-old Honda Odyssey with a whole bunch of miles on it with some duct tape on the side. And that really matters because no one's going to try to rob a car that has duct tape on the side with four little kids inside of it. Like those people aren't
Well, I'm
doing
hoping with me and then the dog, if we were going to try to do that, but we're going to be traveling all the way, driving straight from here to Arizona. So that from
it.
Ohio to Arizona, I'm going to drive. So we're looking to get one of those kind of Sprinter vans. So it's interesting when you're talking about that as the media giants going on the road. So Tom, see, this is very intriguing, isn't it? Would you drive all that way?
I'd get shot somewhere, and my life policy would pay out.
Yeah, yeah. One caveat I should, kind of entertain here is I'm 6 feet tall. My husband is 6'6". So the likelihood of someone thinking about robbing or hurting us goes down when you happen to be giants walking among people. And so we spoke the language, and so people were, very nice to us. And we integrated
So,
into the culture.
so what made you want to do this? To do that
Um,
experience?
Yeah, we wanted to teach our kids what it felt like to be the only person that looked like them, the only person that spoke their language, what it felt like to be in an uncomfortable situation that was, protected, so they could learn from other cultures. So they could learn, hey, there's not just one right way to do things, and because that creates judgment. When I say, oh, my way is the right way and this way is the highway, that creates judgment. But instead of you learn about all these different cultures and ways of doing things and cooking foods and family styles and things like that, then you learn about, hey, maybe there is multiple ways. I don't need to judge my friend because they do something different. We also wanted them to become fluent in Spanish. And so we lived in Mexico for 3 years, and they went to school there and they became fluent in Spanish. And we just love the Hispanic culture. They love kids. And so it's a great environment to raise your children in.
Interesting. And what time, different time period in Mexico, right? Well, how long ago was that?
So we did that drive in 2019.
Okay.
So when we finished is when COVID happened.
Okay. Wow. Impressive. Because again, it's not too safe in Mexico. So you proved yourself again in saying that type of a situation. Especially, I mean, when I was in Mexico years ago, like it was a long time ago, it was not as bad as it is today. So,
Yeah. I
just
find a lot of that has to do with what you're doing in Mexico. So if you're after hours drunk and on marijuana, yeah, you might get robbed. But if instead you're just enjoying yourself with your friends and in a safe environment, then a lot of people have a good time down there.
okay. Tom, your question.
Screwed if I ever went down there. So I'm going to Scotland in a week and a half. Yeah, but I'm flying.
Yeah, I don't think you can drive to Scotland.
Hopefully, it goes like this nicely. Now, but all kidding aside, yeah, her program makes total sense. Anybody who and you can set it up where you're doing it on your children. You can set it. There's so many ways you can set up the plans. It's phenomenal. So save your money on your group health insurance, quit getting ripped off, and then invest it.
Okay, and that's where
Imagine that concept.
and that's part of what you do with claim links, right? Invest, talking to your other business owners about those things.
Right. Her, the founder of the idea uses claim links as services and ideas on our end. And her method makes total sense. I honestly, anybody who has money should invest that way. It's complete no-brainer.
Hmm.
Let's share a comparison. So let's say that you have a 45-year-old female and she's like, I got $200,000. What should I do with this, right? Maybe she got an inheritance from the parents or maybe some investments doing well. If she put that into a traditional IRA that was earning an 8%, and then she tried, went to retire age 65, after taxes, she'd get about $37,000 a year from the IRA. If instead we used our program And she just put, again, just $200,000 in there, and she let it grow until she was 65. She'd receiving, all of these are estimates, of course, about $136,000 a year in tax-free income. And that number would go up the longer that she lived. So my clients aren't having troubles wondering if they're running out of money. They're wondering how I'm going to spend all this money. In addition to that, she'll also have a death benefit that passes down to her kids. And since she's been able to grow her money in two places at once, she has two sources of income instead of just the one.
So, but you're see, and that's where I'm again till Tom came back into this amazing story that he threw into. I'm trying to understand if, let's say, you're going straight through a cash value life insurance carrier with investments, how is your investments different? That's where I was kind of trying to drive that you can kind of be a little bit more than just it's a mixture of the financial and the life insurance, right? In a way.
Yes, yeah. So our founder, Kirk Stafford, he was in the financial industry, was a financial advisor until 30, and then he retired. And then he was like, I should probably go out there again. So he started working in a Mass Mutual office. And when he's in the Mass Mutual office, he was like, hey, there's all this cash value inside policies. Why is it just sitting here? Why don't we do something with it? So he came up with this method of being able to use both of them at once. So what people are able to do is normally when you go and get a policy, hopefully it's structured correctly and not for commission, but those policies usually have a level death benefit. People are just paying the minimums to keep them alive, and they're not structured for wealth and growth. They're structured just for the death benefit. And those are great and they have a good place in your portfolio. But this policy is structured specifically how we pull the different levers and how we do it different things and set it up for that income growth. Then now that we have income growth inside our policy, we have cash value inside of there. We can use that cash value inside of an investment. And then that investment, you have lots of different options that you can choose over there.
Okay.
Our investment portfolio is run by a guy who worked for Charles Schwab for 20 years. He won their top office for over a decade and was Charles Schwab's top advisor 5 years in a row. So a lot of experience. And they said, hey, why don't you come meet my founder? So they're like, okay, I'll come meet him. I mean, what can he teach me though? When he met my founder, he said, I could no longer offer what I was offering at Charles Schwab when I know that this method is so much better and so much safer for my clients. He really hated getting those phone calls of weird clients when the stocks were plummeting, like in 2008. He'd done everything to set them up correctly, and he just hated those phone calls. I asked him the other day, he's been working with us for 2 years, said, how many of those phone calls have you gotten? He's like, zero. I've gotten zero worried phone calls because the method is set up in a way we're using two conservative assets, but playing off of each other to get that increased growth instead of going into something that's risky.
It's almost like your investment life insurance is like Tom's claim links in so many ways. It's a very different and unique.
Yes. And it's not very heard of. It's usually only the ultra wealthy that have something like this, like the Rockefellers with their waterfall method, passing down generations of wealth through life insurance. But my boss has made it so that people can, that aren't ultra wealthy, they can go ahead and access this. And he set it up in a way that's super easy for clients to do that.
Great. And then Tom, you talk, go ahead, Tom. What were we going to say?
Yeah, I mean, like I told my buddy last night who would be talking to this young lady soon. I said, I throw 300,000 in, and in 10 years, you're pretty much guaranteed to have $1 million in there. Where else can you do that?
Yeah, that's a pretty good gain. What is that gain? You're the math guy, Tom.
700,000, right?
Yeah, and that's pretty good.
In 10 years.
Yeah.
Mhm.
And then if you throw even more, it's even bigger. And what
I'd
about
like
the
you to,
market? Go,
yeah,
go.
I'd like anyone to go get a stock, you know, maybe GameStop could do it. They made a movie about that,
I saw the
but
movie. It's a
yeah,
good movie.
it's not a bad movie. Yeah.
Not,
But yeah, it was quite interesting. But it's funny how, yeah, you're leveraging the death benefit with the bank.
okay.
So the bank, yeah. How
All right.
many different, I do have a question, Alicia. How many different banks do you use
We have about 20 across the country.
Hmm.
that, and they're all for it because they're guaranteed to be paid?
Yeah, their death benefit, you are going to die. And so your death benefit is
Sorry to
definitely going to
tell
pay
you.
off that loan. It's called bank-owned life insurance bully. They love it. There's a great book called Pirates of Manhattan that talks all about how banks love owning life insurance.
Yes, and
Yeah.
that's how they're able to do that. It's yeah, and that's what the Rockefellers were able to survive while everyone else didn't during
Yeah,
that
money was in
little
life insurance.
Right.
Yep.
So yeah,
time. But it's interesting how it's a different take, Tom. and that's what you do at Claim Links. You think out of the box.
Yeah, the Kennedys, they relied on it. They made it through bootlegging. Good stuff.
All right. Best place we can go, Alicia,
Yes.
where's the best place for us to contact through Tom, right?
Yeah, just
It's about-
contact Tom and then he'll get you on my calendar. Yep.
All right, go to claimlinks.com, schedule a call with Tom today. Appreciate it, guys. Thanks again. And we won't even know about those technical difficulties. Take care.
They
All
never
right.
happen.